Hey everyone, Chris Johnson here with Money Morning. We just finished the biggest earnings day of the quarter as Apple, Amazon, and Meta came out with their quarterly results after the close. I'm going to spend the next 5, 10, maybe even 15 minutes walking through the results, walking through the charts, and showing you which stocks I like, which stocks I don't like, and what prices you should buy or sell them at. Get ready, strap in, let's get started. Holy moly, what a day. This is the biggest earnings day of the quarter as we had those three tech giants come out. You had Apple, Amazon, and Meta coming out after the close today. The results were a little bit of everything, a little good, bad, and the ugly. I love that theme when it comes to the Magnificent Seven, right? So we got one stock that was a little bad, one that was good, and one that just knocked the cover off of the ball. I'm going to start here with Apple, and let me set it up by going through a couple of the screens here and taking a look not only at the stock, but I want to look at what it does ahead of earnings. Apple has been one of those stocks that you could kind of flip the earnings performance. In other words, look at what the stock does ahead of earnings, maybe 5 or 10 days before, and then look for the mirror or the opposite reaction. So it's an opposite and inverse reaction here to what the street is expecting. Usually when you see the stock come down 5 or 10%, we see a surprise or we see some sort of result from Apple that pops the stock and you get a 10, 15% return. You can see the different charts. The blue here in the bar chart are your results before earnings. And we get these nice big results when expectations, according to the 2-week rally or the activity ahead of earnings, are kind of dim. And the reverse here as well. The thing that's kind of confusing, or at least got the street thinking a little bit, is if you look, Apple has pulled back 5% over the last week. Everybody was bracing for a little bit of an impact with Apple's earnings coming down the pipe. And they should have been. When you came and looked at the earnings after hours today, Apple was a little bit of a mixed bag. And what I mean by that is when you just look at the numbers, earnings per share and revenue, you might think that the company was going to do well. They beat on both accounts. When you start to get into those numbers, and I'm going to go through just a couple of my notes here, you start to see a little bit of concern, a little wobbliness for what's going to happen with the company. iPhone sales, you had a little bit of an up number there, but 13% decrease in China. So iPhone sales, even with the release of that 15, aren't really coming out and wowing investors here. And that is a problem because we know that is what Apple is known for. Services, you saw those kind of a little mixed here as well. We're adding a lot of services, especially with the vision. That's what you're going to hear on the conference call. Looking forward on the vision and management trying to get us to look at those products. But again, earnings are all about the numbers here. When we see the Mac, so in other words, the computer side of the business, it was flat. And I'm not really surprised there. Think about Apple, and it's a little bit of a niche still. A lot more people carrying them around. But when we look at what's on people's desktops when they're at work, at the banks, everywhere, you're still going to see that old PC that is there. So Mac was flat. And then the wearables, a little bit of concern here because that is down for the quarter. And a lot of people looking at what has happened right now with the blood oxygen sensor and the new Apple Watches. And Tim Cook really holding a line here where he's made some comments saying, we're not out to start going out and licensing this. We think people should be wearing the Apple Watch for what's on the Apple Watch, whether it's all the services that you can get through it or just the little features that are built in. I mean, I've converted. I used to wear a traditional watch and now I've got it on. Nonetheless, besides that, wearables down right now. The company is looking forward and not really showing us anything that is huge. We heard a lot about the Vision Pro here and what's in store, but let's face it, that is a version 1.0 product. There's going to be some developing. We saw the 600 developers signed up to start developing apps for it. Nonetheless, you're talking a year before we're going to start seeing something feeding to the bottom line. Right now, it's for the dev people and the die-hard Apple people. When I look at this, they really needed a good quarter. And let's look a little bit of the fundamentals behind Apple in terms of earnings and what we normally see. This has been a quarterly winner. And what I mean by that is Wall Street looked at Apple and said, hey, here comes Apple's earnings. We can rely on them delivering good news and something that is consistent. That has not been the case here. As we look over the last year or so, things have been flat and a little sideways. Your chart there, the orange and the blue lines, represent earnings per share and estimates from Wall Street. And as you know, Wall Street's expectations are all about everything. They have not been raising their estimates on Apple in terms of earnings per share and revenue. And that is telling us that this business is a little stagnant. I think we all kind of know it. Whoever's bought their Apple product is probably a customer for life, but they're just counting on that revisiting it or coming back up and updating. And that's something that for most consumers happens maybe once a year, twice, maybe every 5 years or so, if you think about it realistically. So earnings per share right now and revenue are showing that stagnant. On average, the stock trades lower by 70 basis points, just under 1% here, 2 weeks after the earnings, regardless of what those earnings are. So we usually see a little bit of a sell the news there. On the winning quarters, we see the stock go up about 5.7% and 6.4% to the downside. Now, keep in mind, earnings per share did not lose this quarter. The revenue did not miss either, right? So it's a positive when you just look at the gauges there and say, okay, this is what the company's doing. But going back to my comment about expectations being key, Apple's not setting some expectations that are very high right now, and that results in more worry from Wall Street. Now, let's look at the thing that I consider one of the most important things to watch with the stock, and that is what analysts are expecting. This is something that is kind of a little bit shocking when you look at the chart. And what you're looking at is the percent of buy recommendations and sell recommendations, as well as holds on Wall Street. Your yellow are the holds. The green, obviously, are your buys. So these are the Wall Street analysts that come out and say they think you should either buy, hold, or sell the stock. Right now, 79%. To give you a little bit of reference, and we'll see some bigger numbers as we look at Meta and Amazon in a second, but to give you a reference, the Magnificent Seven companies are above 90%. The analyst community loves those stocks. Apple has been falling out of favor for the last 2 years as we've seen something that I didn't think we'd see in a decade, which is analysts actually dropping their recommendations, going from a buy to a hold. No sells out there yet, but this actually starts to migrate a lot of retail investors when they see those downgrades. And I expect that we're going to see a few more here, as well as the price. Right now, the price target for Wall Street is average around $204. The stock's down at $185. Normally, I'd look at this and say, that's great, it's got room to move higher. Ideally, I'd like to see a target price that's right at where Apple is trading right now after an earnings call, because you expect to see analysts raise their target prices then. That's not the case right now. With Apple trading at around 185, we'll look at the chart in a second. This is a situation where I think we could see price downgrades as analysts start to look towards the end of the year or into next year and say, hey, Apple really doesn't have what it's going to take to grow the company and grow the price as rapidly as we thought. Let's take a look at that price right now. Now, a couple of key trend lines here, and it's going to be the same for the charts that we're looking at following. You've got your 50-day moving average. This is the thing that is basically the trend is your friend. And whenever you see it turning like this, a little bit of a tail down, it's telling us that prices are gaining momentum to the downside. The other is that 20-day moving average. That's more of a trader's trend line, something if you're a faster moving trader, you want to watch. Notice we just broke below that 20-day moving average. So there's going to be short-term sellers that are going to pick up the volume in terms of selling pressure on the stock. That 50-day moving rolling over also tells me that, hey, Amazon is in intermediate term trouble. The thing I'm also worried about here is when I look at this monthly activity. So now instead of a daily chart, we're looking at monthlies. And you can see, even though Apple is just coming off of all-time highs, it's kind of been stagnant, just like those earnings and revenue, right? So we've got a stock that's trading sideways. And as you're going to see here in a second with Amazon and Meta, so different chart, different looking chart, a deeper correction, because Apple's almost like a utility, so it survived a little more during the pandemic. But when I look at this chart, I say, hey, there's some potential right now for this stock to drop from that 185 that it's been trading at down to right around that 165. This red line, which is still a 20-unit moving average, not to get too technical, but it's a 20-month moving average. That is really the technical line of demarcation between a bull and a bear market for a stock. So in short, right now, Apple not coming out and blowing everybody's hair back with their earnings and having some question marks. I think this is a stock you have to be a little defensive on and expect that when we're going to see some market pressure here. And I do still think that we've got a 5 to 10% healthy correction in the cards for the S&P 500. That's going to take Apple down to a price of around $165. And that's where I start to get interested as a long-term buyer. Keep in mind, Apple is still part of the Magnificent Seven, and it is still one of those stocks that really makes the market, if you will. So I see some downgrades coming, maybe some target prices coming here, and I think that pressures the stock, along with the general market, down to a $165 price target. Now, let's shift and take a look at the company that came in between here, and that is Amazon. I'm going to pull my notes out one more time for you, and we'll go to the full screen. So Amazon came in, and they had a good quarter as well. Earnings per share beat, revenue beat. It didn't beat by a huge margin. The company, when they pointed out what worked in the quarter, it came down to AWS, which is what we want to see right now with, AI growing so quickly. AWS is going to be right there at the center of all the conversations when it comes to AI and this just explosive growth that we've seen. The other thing that Amazon really had going for it last quarter was the holiday shopping season. This was a huge record holiday shopping season for Amazon, and I don't think it comes as a surprise. We all know that we were out there shopping, a lot of people using those credit cards and really kind of extending themselves a little bit more. That paid off for Amazon in terms of their traditional shopping. And this is crazy because traditional Amazon shopping, if you remember back to the 1990s, was buying books online. Anyhow, we're buying all of our gifts and everything. Consumer strength giving a lift to Amazon stock. Shares are trading higher by about 5% after hours because of the results. I mean, this is a great story for the meat of the market, and that's what I consider Amazon to be. It's one of those stocks that truly is right in the center of everything, from AI down to consumer activity, and with everything strengthening in the market and all the boats in the harbor being lifted by not only AI, but also this idea that we're going to dodge a recession. Amazon's going to be right there along with us. It is the perfect blend of consumer discretionary or retail and technology all in the same spot. That's why I like Amazon. I think it should be a part or a staple, if you will, of anybody's portfolio. Now, let's look at some of the expectations here that we saw from Wall Street, because this is a situation where I think the expectations are going to get a little bit of a lift. Now, on average, the stock trades lower by 1%. Remember, the pandemic and a few other things sent Amazon into a little bit, not a tailspin, but let's call it some turbulence over the last few years. And we've seen that in the revenue and the earnings per share in terms of the actual beats here. Amazon was knocking the cover off the ball, and then all of a sudden we saw them drop down. That's why you see this huge change in that orange line, which is the expectations and the beat. So in other words, where the company was coming in against, here's your expectations, right? So this is a company where it was absolutely blowing out the earnings per share. And then the street kind of caught up with it and said, hey, we're going to raise our expectations for the stock. And that little tumultuous period, is where the stock really was putting in some bumps here. We all remember what happened during the pandemic, and it fared itself out on Amazon as well. So what we are seeing right now is a return to that trend of earnings per share and revenue strength from Amazon, and it's exactly for the reasons I've pointed out. The stock is a well-diversified stock, right? When we look at the quarters where it's won, it's up about 7.7%, and it's down 8.7% when it loses. So call it a coin toss in terms of the range of where it trades afterwards. 47% of the time, the stock trades higher after earnings. So again, another coin toss here. So what do you do with Amazon? The stock that seems to be in the middle. It's one where the expectations are now starting to get a little bit higher, but Wall Street's going to determine what I think the next big move here is. And I think it's different than what we just talked about with Apple. Let's look at it. The expectations, and let's start with the buy, hold, sell. Buy recommendations on the stock are around 98% on Amazon. Now, think about what I just pointed out on Apple, 79%. It used to be up here at 95, 98%. That's what shows you what happens when the analyst community starts to downgrade a stock. It gets out of favor, and you start to see less growth from it, which when you compare Apple to Amazon and Meta in a second, you're going to see that there is a big difference. So with 98% of the analysts, I worry about a crowded trade. In other words, whenever something happens to the stock, you're going to see analysts start to bail. and move into that hold category and lower their target price. Not the case right now with Amazon. Keep in mind, it's only when things start to reverse. The analyst community is happy to stay on the buy camp right now. And what you'll see is a lot of analysts come out and reiterating their out view on the stock, coming out and saying we still think it's a buy or it's a strong buy. That's what you're going to see from the analyst community right now, as well as a potential for some more upside from this. The target price for Amazon right now from the analyst community sits at $175. We're sitting right around that price on Amazon. So the next thing to come is going to be target price upgrades from Wall Street. They can't say, I want to buy it, I want to buy it, I want to buy it, because they're already buyers. But what they can say is that I expect the stock price to go up to $200 or $225 or even $250. Some of these outlooks get a little bit outlandish, but nonetheless, keep in mind, every time they come out and say, I think this stock is going up to this price, everybody else listens. And also, Wall Street loves to be in company with other analysts. So in other words, the analyst community likes to be standing in the same camp on a stock. And that's why when we see one upgrade, we're going to see multiples. Look for that to start to really drive Amazon's performance here. And speaking of performance, we're going to switch over and take a look at Amazon in terms of the stock here. And this is one, again, not really at new highs. We're hearing all about new highs on Wall Street and how, the NASDAQ and Microsoft and all these companies are hitting new highs. Amazon's not there yet. It's still kind of stretching its legs, which I like. With the stock trading right around that 170, 175 level after this earnings report, this is going to be a stock that you're going to start hearing about breaking two new highs. And this is the monthly chart. So we're looking at a long-term view of Amazon right now. But once we hit that 175, where those target prices are, that's when you're going to start to see the upgrades coming for the stock. And I see an upside of $200, maybe even a $210. That gives you about 25% plus upside on Amazon shares. And again, this is because Wall Street is going to readjust their outlook, raise those target prices. And whenever that happens, we see the crowd start to react by buying more shares. So bullish on Amazon after this earnings report. I think they put in a good, not phenomenal earnings report, but it's good enough to get the stock moving and start poking up to new highs here. You'll want to be on this stock moving forward, I think, for the next 9 months at least. And again, my market outlook has a 5 to 10% healthy correction for the S&P 500 and the NASDAQ 100. That doesn't mean that you bail on Amazon. You look for a buying opportunity. I think that buying opportunity comes somewhere around $165. Maybe if it were really hard pressed, $150. But I'm a buyer of Amazon on those dips. Let's take a look real quickly at the daily chart of Amazon so you can see a little bit of the nitty gritty and where those technicals are. That 50-day moving average that I mentioned, trading higher. The trend is your friend. The 20-day, unlike Apple, trading higher. If we saw a pullback, you're going to see a little support at that 155, but that 150 level is staunch support if we see that market correction. So 150 is the level that I want to target it at. 225 is where I look for this stock to go over the next 9 months or so. So a strong year for Amazon. Let's move on to the next. And I'm getting a little hoarse here, but I want to push through, finish this up, and have a great finish for you. And that is going to come in the form of Meta. Now, I'm going to start by saying I've not been a huge fan of Meta. I'm just not that guy, right? And if you remember, last year in January 2023, we saw a lot of analysts coming out, even Jim Cramer saying, hey, we're kind of losing faith in Meta. And going back to that, we're talking about the metaverse, and it felt like Meta had kind of lost its way, was focusing on something that just nobody could put their finger on and really materialize in their head. That has changed, and this has turned into one of the biggest turnarounds I think you're going to see in a decade at least. Meta came out and did what Apple should have done. They blew everybody's hair back. And by that, I mean they beat on earnings per share handily, revenue through the roof. Ad is where it's at right now. Their ad space, but it's also the activity for Meta. So in other words, people are getting on not only a monthly, but on a daily basis, all their platforms and actually using the social network the way that they were a few years ago. So we're getting back there, and that is reflecting in the price. Keep in mind, they also went on some pretty heavy cost cutting let's say, extravaganzas almost. In the end of January 22 and all through January 23, we heard how Mark Zuckerberg was cutting back on all kinds of development. When you look at Meta Labs, they're still spending money there. And I think you're going to hear analysts start to talk about how that money, they'd like to see that start to develop or start to come down a little bit, start to see some results. But that's the long-term vision. And as long as this ad revenue and activity is starting to kick in heavier, I think people are going to get a little more patient with Meta. We'll look at that chart in a second. It is astounding. But let's take a real quick look at what is going on with Meta in terms of the earnings. Now, this is a little shorter view because remember, they went from Facebook to Meta, so some of the earnings numbers are a little wonky here. But nonetheless, you're going to see what I love seeing, which is a trend in the earnings per share expectations and the beat. Meta is in line, and this quarter is going to make this chart go even higher. The company also guided above Wall Street expectations for next quarter. So something that is going to be powerful in moving the stock. It's been trading up to 15% higher in after hours. I'm not going to be a buyer here. I'll show you where I will in just a second. But the story here is that the earnings revenue beat as the company saw increasing in all their business lines, and they've kept their cost-cutting efforts in hand right now. They guided the outlook much, much higher than last quarter and by the street's expectations. And as I said, this is one of those comeback stocks in the NASDAQ 100 that I don't think you're going to see in a decade or maybe even two. There are a couple of companies out there that have reinvented themselves. GE is one. Intel's in the process of doing one. IBM's in the process of it. But Meta is actually moving, and it's moving quickly here. So what do I like about the earnings results? Let's take a look. 83% of the time, Meta goes higher after the earnings results. This is going to be another one of those. 8.7% is the average upside. We're going to blow that out, I believe, tomorrow when we start trading, as you're going to see people chasing Meta higher. The other side of this is 13% to the downside. I don't think that's in play at all. We have seen some quarters that have just killed it, and that's why the average is 21% to the downside. Again, that is not in play this time around for Meta. Let's look at the engagement. And again, a little bit of a crowded trade here, or a very crowded trade. 97% of the analysts a buy on the stock, just like we saw on Amazon. But again, the target price here is what I'm going to be watching. The analysts are going to reiterate their buy recommendations, and that's going to drive more buying from the retail investors. 385 is where your target price for Meta is right now. So $385, stock's going to break $400. This is another situation where Wall Street is going to be catching up with their target prices. So I believe starting tomorrow on Friday, you're going to see upgrades to the price targets, and I think they're going to be huge. You're going to see some 5 handles on this. So in other words, target prices that are above $500, and that is going to get the retail investor and even the traders a little frothy here. I think you're going to see the stock make it well above that 400. And let's take a look at the price real quickly in terms of the daily chart, and then we'll look at the monthly, because that is the amazing thing about Meta. So when we look at this daily chart, we got a little bit of pullback here in Meta over the last couple of days, a little bit of knee-jerk reaction, people backing away from it. $400 though is right there. One thing you need to always remember is that the market loves round numbers. So as Meta starts to break through this $400 level and start to pop higher, it is going to drive more and more activity in the stock. And to put it mildly, I mean, the market's going to go bonkers. Whenever we look at those round number levels, you automatically think, what's the next round number? If it's a $10 stock, is it going to trade up to $20? If it's a $100 stock, where's the next one in mind? It may not be 200, but it's probably going to be 150 or so. I think with Meta, you have to look at it from a perspective of, as analysts start to eye that $500 level, we're going to start to see people go nuts about where the stock is going. The stock will trade up to $425, I believe, after this earnings announcement. You'll see it pull up. And remember, I've been pointing out that I think you're going to see a situation where the market's going to start to drag us down just a little bit. And that's not going to be something that Meta is going to be immune to. You'll see the stock price pull back. Here's the 50-day moving average, that green trend line I pointed out. It is very friendly, obviously, and that 20-day is the first spot where we would see support. It's at $375. Again, we're going to blow that out. I think we see the stock trade up above $425. Analysts are going to come in a flurry and be excited about it. Wall Street's going to get more excited about it. And then that 5 to 10% pullback pulls the stock back. Now, where do you buy it becomes a question, because I don't think it's a stock you chase higher. Notice that Meta just hit new all-time highs. I don't think that's anything to brag about with the year that we've had here, but if you look at what Meta has done from that bottom where everybody hated it, up more than 300%, this stock is. And this stock has blown everything out of the water. When you compare that to an Amazon, maybe 80, 85% or so. Same with your Microsoft, right? This is truly a comeback story, and I think there is still a lot of gas left in the tank here. So where do I buy it if I'm not going to chase it tomorrow, next week? I'm going to wait for that pullback, get that $400 price that I want to see, the round number, and then ride it all the way to that $525. And that's, I think, the first stop on this long-term bull market train for Meta. There you've got it. A wrap on the biggest earnings day of this quarter. So in case you missed it, let me go through the prices here. I'm looking at Apple as a buyer at $165. I don't think you can walk away from Apple and just completely get rid of it. It is part of the market, and for that reason, I look to buy it on a dip, and I think it dips down to $165. In Amazon's case, this stock is going to go up. A good report for a good, strong company, a great trend. Look at that 175 with a target of 200 here over the short term. Again, I think you see the analyst community come in and upgrade their price targets right now. So I'm a buyer when we pull back to 170, when we get that broader market weakness I think we see. In the case of Meta, man, if you're not in this stock, don't chase it over the next week. It is going to rip higher. You're going to get a better opportunity to buy it than what you see tomorrow morning on the prices. Look for target prices to start going up to $500 and above. The analyst community is going to love what they saw today. If I'm looking to buy, when it dips down to $400. $400, play it by the round numbers here. Remember, Wall Street and traders love round numbers, rather. 400 and 500 are going to be the ones to watch. I'm a buyer of Meta at $400 with an expectation of seeing 500 pretty quickly here. So that's it. Hope you have a great trading day. Remember to like and subscribe. Follow everything we've got here at Money Morning. We're giving you an edge on the market, and we're having fun at the same time. I'm Chris Johnson, and I wish you the best trading success.